Hi, I'm Brooke Thackeray. Welcome to What's Hot and What's Not in the month of June. May has been a fascinating month. We've seen that pullback in the S&P 500 for most of May, and then we've seen a rally taking place in the last few days of May and perhaps heading into June. That's actually a seasonal trend. We're going to talk about that today. And we could have a rinse and repeat situation where we could see another tradable rally coming up shortly as well, despite being in the 6-month unfavorable period from the stock market, which lasts from May until October. So let's take a look. I want to start by taking a look at the seasonal trend for May, and then take a look at June and July, because that's where the next opportunity may lie, towards the end of June and into July. So let's start by taking a look at the Thackeray's 2022 Investors Guide here. And you can see, let's jump to May. Okay, and here's May. This is the average seasonal trend for the S&P 500. Every year is different, of course, from 1950 to 2021. You can see that here in the first few days of the month, you see the market tends to rally, the S&P 500 rally, and then you see a pullback that takes place, and then an uptick towards the end of the month on average. And if we take a look at what's happened this particular month here, we can see that the S&P 500 has rally the first couple days of May, pull back, and in the last few days has had this really strong rally taking place. So where does that leave us heading into the month of June? So if we take a look at June here, let's jump ahead and take a look at June. So June, the first few days in June tend to be positive for the S&P 500. And on average, and then you tend to find the market fairly flat. Some sort of pullback take place in June. It could happen a little bit earlier or not, but this is on average. And then a rally towards the end of the month in the last few days of June. And this is where the next opportunity may lie. Not particularly in the last few days, but it's usually a good entry opportunity somewhere in there. But let's jump ahead to July. If we take a look at July, look at this. Look at this strong performance for the S&P 500. Strong performance in the first half of the month for July. Look at these days down here. So these bars represent the frequency of being positive. So, and the midline here is 50%. Here's over 70%. That's a huge trading day success rate. So these are the trading days for the month of July. So we're seeing some really strong trading days, frequency of performance, and strong average gains. Why is that? We are in the 6-month unfavorable period for the stock market. So why does this happen? January, April, July, and October are all earnings months. And what you find is that the stock investors tend to push up the stock market in earnings months as the earnings season approaches, usually about mid-month, so mid-July, as investors want to be in the stock market before earnings take place. Particularly if the market's been beaten up ahead of time. And so you tend to find in January, April, July, and October, the first half of the months being positive. So this is another rally that could be an opportunity towards the end of June and into mid-July. I've written about this in my books before. I've called it the summer sizzler, something to watch out for. Now, these are the major sectors of the market. They're ranked by average gain from 1990 to 2021. Healthcare tends to have the highest average gain in the month of June. I have to say that there's not a really strong leadership from a seasonal basis in the month of June. This column here represents the frequency of outperforming the S&P 500. And you can see here outperform 63% of the time, which is not a huge number. Telecom, information technology, I want to point that out. Information technology, 41% of the time it outperforms the S&P 500. So why is it one of the better performing sectors? It's because when it outperforms, it really outperforms. And when it underperforms, it underperforms, really underperforms. So it's something to watch out for. So it's a little bit sporadic in its seasonal performance as far as that goes. Energy, I do want to point this out because energy is performing so well. Obviously, there are some exogenous factors with the war taking place, and that can overwhelm technicals or seasonals, of course. But on average, the energy sector usually finishes up a seasonal period of strength in May, and sometimes can run into June. But here you can see here, this it's not one of the top performing sectors. It is on average negative in this time period, and it's only outperformed the S&P 500 44% of the time. Now, anything can happen in the Russia-Ukraine war, of course. But on a seasonal basis, we tend to see the energy sector start to weaken a little bit here. I want to jump right down to the material sector because it is the bottom of the rank here. This is mainly chemical companies in the U.S. Only 34% of the time it outperforms the S&P 500. And on top of that, it's an average negative performance of 1.2% as well. Let's take a look at some of the subsectors of the market, such as, in this case, pharma. And these are just selected subsectors. Pharma, if healthcare sector does well, you'd sort of expect the pharma sector to do well in the summertime, and that's exactly what takes place. Retail, retail has just been absolutely decimated recently. So this is going to be an interesting one to watch if that actually does take place. Gold, in this case, it starts a strong seasonal period in early to mid July, but some volatility, and if volatility takes place in June, it can lead to some interesting pickups for the sector. Biotech sector can be a really strong performer. Strong seasonal period starts on June 23rd. Even though it's only 48% of the time, it outperforms for the full month. And what that tells you is there's a lot of volatility that can take place, and the opportunity lies a little bit later, perhaps a little later on in the month. But it can start early. That's definitely a word of warning here. What I want to do now is I want to take a look at the graph on some of these subsectors of the market or sectors of the market. So let's jump right back. And let's move forward here. And I'm going to let's take a look at gold first. What we've seen with gold is we've seen gold perform well into March. And let's just draw this here. We've seen gold perform well into March, and we've seen that fairly flat, and then it's pulled back. And that's really been recently because of the stronger U.S. dollar, which has hurt gold. And also, too, we've seen inflation expectations actually pull back a little bit here as well. So the real rate of interest actually starting to move a little bit higher, which has actually hurt gold a little bit. But relative to the S&P 500, it's actually been performing okay. Yes, the S&P 500 has been moving substantially lower. But the point here is we do have this support level here around 1750, just above 1750 for gold here. And if we do see some volatility, it might be an interesting opportunity to be an early entry opportunity for the gold sector. Now, the real sweet spot for the gold sector trade really is August and September, but July is when the seasonal period starts, and the volatility in June can provide an interesting opportunity to get into the sector. I want to take a look at in this case, the biotech sector. I mentioned that as being one of the better performing sectors. And what we've seen is the biotech sector really performing poorly in 2021 and 2022. But look relative to the S&P 500. I'm using the IBB ETF. This is mid-2020, and the sector has underperformed. But really what we're seeing is this base building here taking place relative to the market. That's a good sign heading into a seasonal period. It actually sets up well for the sector to perform well in a strong seasonal period. I want to jump back and take a look at, in my book here, for the biotech sector. Look at this graph here. This is 1993 to 2020 for the biotech sector. The bar represents the average performance for the sector, and the cross represents the median performance. In this case, they're both 6%. That's a huge average performance and median performance for a sector. This stands out like the CN Tower relative to other months. This July really is a sweet spot for the biotech sector. And if you take a look at the frequency being positive 76% of the time, outperforming the S&P 500 79% of the time. That's a really strong metric. If there's one month of the year on a seasonal basis you want to be invested in the biotech sector, it would be July. So June can sometimes represent a good opportunity to get into the sector itself, something to watch out for. I also want to point out another sector that's we haven't talked about here, and that is U.S. government bonds. I know everybody hates government bonds. I get it. And they performed so badly since January. Well, really, in this case here, I'm using IEF for government bonds. Really, you can go back to 2020, okay, and say they performed badly. And the rate of decline in 2022 has been dramatic, to say the least. But guess when the strong seasonal period starts? May 6th. Look at this. This is when the sector turned around in early May. We've seen some strong performance for the sector. Yes, the Federal Reserve can keep hiking rates, and U.S. government bonds can keep performing well. They are not mutually exclusive. especially if we start to see reduced expectations for further hawkishness, even though they're raising rates. So we have started the strong seasonal period for U.S. government bonds. The real sweet spot to the trade is August and September, which lies ahead. But overall, from May 6th to October 3rd, that tends to be the stronger period for government bonds at this time. So where do we stand right now in the month of June for the markets? Well, we saw that performance for the S&P 500 the last few days of May performing well. We saw the S&P 500 put in strong positive performance for more than one day in a row, which has been positive because the markets had trouble doing that. So stringing together a few positive days has been a really positive factor for the overall market and indicates that we might see the market actually perform well over the next little bit here. Now, how far does that go into June? That's a very difficult one to determine. On a seasonal basis, it's usually just the first few days, and we tend to see the market chop around a little bit and then pull back down for another rinse and repeat opportunity towards the end of the month. But the market is showing some strong momentum here. So we could actually see the market extend its positive performance further into June, perhaps even before pulling back. I think the base case really is the seasonal base case would be that we might see after the first few days in the month of June, the market actually perhaps chop around a little bit. It does have a lot of headwinds. I wouldn't expect a huge V-bottom rally here. This isn't an opportunity of a lifetime, I don't think, from that perspective. There's too much going against the market here, and it's very difficult on a seasonal basis for the market to actually rally from this point. In the summer months, when the stock market produces a big rally, it's usually when we're coming off of a recession or the economy is growing very strongly, and that's not the case at this point. So yes, there may be some more further gains ahead for the market, but they're probably not going to be huge gains. But I do think there is perhaps another tradable opportunity coming up for the market later on in June into July. Now, I want to say the overall backdrop is we're still in that unfavorable 6-month period for the stock market, which lasts from May until October. So although there may be a positive rally in here, overall, the trend is still probably downwards. And on a seasonal basis, that supports that. The market tends not to perform well in the second half of July into August and September. So yes, we may see some rallies here, some positive excitement, and investors may take advantage of that if they're so inclined. But from a longer term perspective, when we're looking at a little bit further, we still have a lot to fight against for the market. A lot of headwinds here, and I would not expect the market to move substantially higher, like on a V-bottom like March 2020. I don't think that's the case here, as the economy is not showing signs of strong growth here, and the Federal Reserve is just ramping up its efforts to rein in inflation at this time. So yes, there could be some opportunities here coming up, but I would say be very careful nevertheless. Thank you very much for joining me today.